So what I'd like to do is welcome everyone to this session. It's opportunities for the Malta Stock Exchange, and we will talk about several different points that may be of interest to you if you're interested in the stock exchange field, the capital markets, and those types of things. What I will do is I will start out by introducing myself and the panelists, and then we will get into the more formal bullet points of the discussion and the topic. So my name is Drew Markson. I have pretty much three different hats. One, I'm adjunct professor at Thomas Jefferson School of Law. I lecture mainly on financial services there, but also sometimes on law and tax issues as well. I've covered Malta in some of the lectures that I've done as well. The second thing I do is I run a proprietary trading company called HB Capital. It's a private company. We're not listed on any stock exchange. You can find us on Bloomberg, but it's a private entity that proprietary trades. And then third, I serve as an advisor to a hedge fund known as the Arnova Asset Management Fund based in Cayman. It's a systematic trading firm. Now I would like to introduce the rest of my panelists. Eileen, would you like to?
So hello, good afternoon, everyone. My name is Eileen Muscat. I'm the Chief Executive of the Malta Stock Exchange. I've actually been with the exchange for over 20 years now, so I've basically seen it from its roots, if I may say, to what it is actually now. So a lot of development in 20 years.
Brian Healy, I run the Irish Stock Exchange's markets for traded markets, or our fixed income cash equity business, and I've also got a special responsibility for business development and some of our key strategic relationships with Deutsche Börse and more recently with the Maltese Stock Exchange.
Hi, good afternoon. Luis Gabriele. I'm partner heading the corporate and finance unit within Cavaliere Preziosi, a local law firm. I've been involved with the stock exchange probably since its inception, acting for a number of issuers of both equity and debt instruments listed on the exchange.
Okay, thank you. The way the format will work is I will ask each of the panelists one of the bullet point questions, and they will speak for a few minutes on the topic, each panelist, and then we will field questions from the audience so that you can ask questions while the topic is topical and timely. So that's pretty much the format that we'll do. First, I'd like to start out with a little stock exchange joke, basically to lighten up the room a little bit. And I looked long and hard for this, but I eventually found a joke. It was by Henny Youngman. Henny Youngman is a famous U.S. stand-up comedian. If you've never heard of him or seen him, he was made famous in the movie Goodfellas with Robert De Niro and Ray Liotta. You might remember a scene where Ray Liotta, who's playing mobster Henry Hill, is trying to impress his girlfriend, and he goes into the basement of this famous Copacabana club in New York City through the basement, and they come up through the basement, and then they get front row seats right for the stand-up comic, and then Henny Youngman comes in. Well, he had a stock market joke among his other talents, and the joke goes something like this. His broker calls him up and says, "Hey, Henny, I've got a hot stock for you. The stock's at $1.20. What do you want to do?" So Henny's like, "Well, yeah, I don't know. What should I do?" The broker says, "Hey, it's at $1.20. It can't go much lower, right?" He goes, "You're right. I'm going in big on this thing. Buy 100,000 shares." A few minutes later, the broker calls back and goes, "Hey, Henny, the stock's at $1.70. What do you want to do?" He's like, "Oh, this is exciting. Buy another 100,000 shares." A little while later, the broker calls back and says, "Hey, Henny, the stock shot up to $2.40. What do you want to do?" Henny Youngman says, "Oh, the stock's doubled in such a short period of time. You know what? Turn around and sell everything." And with that, the broker lets out this sheepish laugh and goes, "To who? You're the market." So hopefully we don't run into those liquidity issues here today. But with that, why don't we jump into the first question? And this first question deals with opportunities for the public funding of small to medium enterprises on the stock exchange. And I'd like to start out with Lewis. Lewis, what are your thoughts on that?
Well, I think this is an opportunity for the Malta Stock Exchange to go back to basics and fundamentally to act within particularly the local dimension as and providing access to capital to the smaller enterprises which might have huge growth potential. we are all aware, I'm sure, that the small and medium-sized enterprises are the backbone of the European Union economy, much more so in Malta, without entering into the definition of what's small or medium-sized, because by European Union definitions, probably most of Malta's enterprises would be micro. But I think that with huge pressures coming onto the banking industry that have been the lifeline of all SMEs, particularly in Malta, in the funding of SMEs, with banks coming under huge regulatory pressures to have higher quality assets, lower risk assets, and more prudent provisioning policies, I think that banks, the funding of small to medium-sized enterprises will become, going forward, potentially more expensive, or in some instances, altogether unavailable in some circumstances. And I think that that provides a huge opportunity for the Malta Stock Exchange to become really a stalwart in the local capital markets to provide access to capital. The idea, I think, here, we are at a time we need to rethink what we've taken for granted so far. And I think the time might be here for us to think of a third generation market without the need of having set views on certain issues which today apply to regulated markets and MTFs. I think there is room for a third generation market with lower levels, lower costs, and lower levels potentially of disclosure or ongoing costs for issuers in order to try and find a way to allow SMEs to access capital as and when they need it. I think that the stock exchange can't do this on its own, but it can definitely be a very important and significant player in a national strategy to achieve the object of allowing where the banks will keep on coming under pressure and where funding from banks is unavailable, to provide yet a platform, another avenue for SMEs to find funding.
Then we'll move on to Eileen.
Well, certainly here I concur with Lewis, with what Lewis has said, because certainly the space, the SME space, is a space which is certainly showing a lot of interest, even on the international side. We are seeing a lot of interest in the Malta Stock Exchange from that environment, from those companies. It's also a space which can offer a lot of opportunities to Malta, to an exchange like Malta, which is very small, because in the wider European context, SMEs are being seen as, perhaps by the larger exchanges, by the more developed, whose business model is on volumes rather than on the amount of companies or that are coming, these companies are looking for small exchanges like ours, where they can get a more personalized service, a service which is more tailor-made to their particular needs. And the particular needs may be from actually issuing a very small IPO, which would be a micro or a small IPO, to more specific, even IT services that can be offered. To pick up from something what Lewis said as well about a third market, a third generation market. The exchange has been thinking long and hard, in fact, about developing a third market. We already have two markets in two listing boards. We have an alternative companies list that goes some way to addressing the SME requirements, but I don't think it's really there. So yes, this is something that we're actively looking at to create a space for perhaps these companies which might otherwise not come. it's not an easy task to do, certainly as we can't do it alone, because this is something where even from a regulatory supervisory point of view, we would need a backup. Also, I think there has to be a more wider national emphasis on attracting these companies and to make Malta more attractive for these companies.
I might offer a perspective which is maybe just to start with a kind of a pan-European one. I think Europe has a model which is essentially a bank-led funding model for industry. That, you know, if you compare Europe with the US, Europe, you know, SMEs in particular achieve 85% plus of their funding from banks, basically, or that has historically been the case. You look at the US, the figures are, it's a complete volte-face. I mean, it's a minority of funding is bank funding, and about 60% plus comes from capital markets on the round. Now, that's both a structural challenge, but it's also a significant opportunity. I think it's a far more significant opportunity when you think about the fact that Europe's banks are deleveraging in a significant way. Also, Europe's governments, so the availability of bank funding is less available. And similarly, governments and kind of soft aid from government is also contracting. So therefore, there is actually a hiatus that the capital markets, and particularly exchanges, can and should fill. That said, why isn't it happening in the way that it needs to? I think there are some impediments to that. Speaking from an Irish perspective, the whole area of fixed income and corporate bonds. In Ireland, we actually have a significant tax disadvantage to raising funds by corporates through a corporate bond mechanism as opposed to equity, as opposed to various other mechanisms. That's less so in other jurisdictions, and I think you can point to success stories. For example, one of the regional German exchanges, the Stuttgart Exchange, has developed very successfully in the last 3 or 4 years, well, probably 5 years now, a high-yield corporate bond market. That is, and it has now become, it is the go-to market for raising corporate debt in Germany, even above Frankfurt, above the main Deutsche Börse in Frankfurt, basically. And that just shows how, and that is a small exchange, essentially, in focusing on that area. I'd agree with Eileen. I think it does require an ecosystem. It requires a concerted approach, and particularly so if you happen to, in our case, live on an island off the west coast of Europe, or in Malta's case, an island in the middle of the Mediterranean. We need to display joined-up thinking at a governmental level, at a regulatory level, and very importantly, the advisory community. And I think getting back to Lewis's point, what Lewis is calling a third wave, we have a market which we call the enterprise securities market. We've had an IPO on it recently. It's an oil exploration company, small oil exploration company. We had 2 IPOs on it last year. But even there, that still falls under the main kind of heavyweight regime at a European level. It's an MTF, basically. It has very high levels of regulatory and transparency requirements. It's also got quite reasonably high levels of professional fees associated with it. I think we need to start thinking about how we engage with SMEs, almost at a kind of a bulletin board, informal networks level in the first instance. And that is an area which we're focusing on, certainly kind of more and more, and building those links over the coming years, and looking after the kindergarten, because from our perspective, I didn't actually fly out here in Ryanair this time, but I normally do, because not only because they're listed on the Irish Stock Exchange, and I love their customer care ethos, but it's a direct route, and it gets me from Dublin to Valletta quicker than anybody else. But I mean, I remember when Ryanair were absolutely an SME. They started out of a failed IPO of another aircraft leasing business with 2 planes, and that wasn't that long ago. So of all of us exchanges, our blue chips of tomorrow are our SMEs of today.
Okay, I just have one question for the panel, and we've talked a little bit about this third generation, or this third generation market as it might be, and both Eileen and Brian had talked about that the exchanges are looking at, in fact, let's call it a third board or a venture capital market that might have different listing requirements and costs than the main board. to attract SME business. But Lewis, you had touched on the same topic, and you left it a bit open that maybe this might not be done on an exchange platform, but somewhere else possibly. And my question is, what other financial intermediaries do you envision to fill this space of capital raising for SMEs?
Well, I think that in terms of a trading platform, my intention was that it would be a traded platform, but it's, and this is why I think we have to question ourselves and challenge what the rules that we've taken for granted for so long, and because this is the way we've always done things. I think that by a third generation market, what I would be looking at is a market which addresses specifically the needs of SMEs, independently of how they are traded and where the intermediaries come in. The market dynamics will not be too different. It's how to address the specific requirements of smaller companies, like, for instance, and this is why I said I think that the stock exchange cannot achieve this on its own. It would have to be part of a broader-based strategy by, for instance, providing some grants or assistance to SMEs to pay off advisory fees or reduce listing costs. But it has to be part of a national strategy to attract SMEs. I think that there are inhibitors at the moment for SMEs. People who are entrepreneurs who are in SMEs have cultural issues with going to an exchange. They are not familiar with what happens on an exchange or how it trades or what the impact on them can be. And I think that we need to start identifying and addressing these inhibitors and trying to facilitate by creating markets that are more understandable and by attracting these people to them by actually removing these barriers, particularly cultural and economic barriers to entry into the market.
Would any other panelists like to add anything there, or can I move on to questions from the floor? Or?
Yeah, if I could just add one thing on that. I think that there is one of the challenges for coming up with a third generation is that I think at one level there is a regulatory tsunami that is sweeping Europe basically, and that tsunami has a particular. It is to an extent, insofar as market platforms are concerned, it's a one-size-fits-all. So the prospectus directive is great news for exchanges. It's great news for large cap companies who want to passport on a pan-European basis and makes it more efficient for them. For SMEs who are looking to come to a market, it raises the bar. They now have to produce a bigger prospectus, which means a more costly prospectus. So there is room for a kind of a more fit for purpose market, and we all need to think, and particularly even at a European policy level, about, and this is fundamental to EU growth actually, because growth comes from the indigenous sector. If we're not going to be bailed out of the morass that Europe is in by the cavalry arriving from the US or maybe from China, or maybe from the Far East. But the traditional sources of impetus are now unlikely to come to our rescue. So focusing on indigenous industry. And I think the policy gap, and even if you're to look at this, there was a policy paper that was produced by DG Markets in the last month, a green paper on the funding, long-term funding of corporates and industry. And I was fascinated actually to see, it's a very light paper in a sense. Some of the ideas are good, but it runs to about 10 pages. I would suggest, I'm no fan of 100, kind of volume is equal to quality, but I would just suggest that probably 10 pages probably isn't enough to address the question of funding of corporate Europe. And I think Malta, actually, in one of the, I came across, I think in the report from the central bank, and the governor was talking about an initiative about a development bank. And I think that's an area where markets, some types of SMEs, where you look at infrastructure funding, you look at social funding, you look at environmental, basically, and that's a particularly interesting area. Again, going back to Ireland, the whole area of alternative energy. in terms of one of the significant sectors that is absolutely SME as far as we're concerned at the moment. But some of the technology and some of those businesses have the potential in 10 or 15 years' time to be blue chip companies. But again, you need an appropriate infrastructure for that. And I think it's a joined up policy approach is what we need.
I refess, last week I had the opportunity to speak to some colleagues from Australia, and it's very interesting. And you think, well, what's the commonality between Australia, which is massive, and Malta, which is small? I was very, very surprised to hear some figures, and that 60% of GDP of Australia is actually through SMEs, what would be micro companies and SMEs, and it was interesting to hear on a federal level and then on a state level the actual infrastructure they are building, even from just purely from committees, just councils that are geared to help these SMEs and geared to help them to point them in the right direction where they get funding. And I thought that was a very, very interesting thing to do, because if a country as big as Australia can do something like this, which is massive, and then this would be a very, very good example of how, even from grassroots, we could actually, on a national level, on a wider level, actually help these companies by giving them a voice and giving them a forum. I thought that was an extremely interesting example to follow.
Just to quickly a follow-up with Brian and Eileen on this question. So small to medium enterprises, they have a great success and a great failure rate. You look at Apple Computer and Microsoft. They were started in someone's garage. And when they were started in someone's garage, let's call that the incubation stage, they were a high-risk, high-reward situation. But by the time these firms have developed a bit more and are looking to raise capital on a small to medium enterprise stage, hopefully they've reduced the risk of the incubation stage and now have the benefits of the growth stage. Do you see that on the exchanges as well, so that these companies that are coming to list are in their nice growth trajectory and therefore pose a lower regulatory risk?
I think so. I think that it would be, because even with a lighter regime with lower cost, you still have a regime. There is still a structure. There is still a regulation that has to be followed. There are still rules. And I think, being on the market, just the transparency given to these companies, the fact that they are transparency, does actually help to, I would say flatten the growth, or control the growth, but make it more, make it perhaps slower, and give them chance to expand. When these companies are actually expanding, if I may say, in a public eye, they're actually doing it. And it's easier for investors and prospective investors actually to make a judgment on those companies. And I think that's the great thing of exchanges, in fact, in that market.
I wouldn't be concerned for the similar reasons that Eileen said. We operate in a highly regulated environment at a national level, within a highly regulated environment at an EU level. So, and the disclosure around it basically is, I think, investors are well served. Basically, could be better served. I take it completely, kind of, rather than looking at the regulatory risk. I think in some respects there is a cultural and structural change in investing. And you mentioned Apple. Think about Facebook. Mm-hmm. Facebook didn't come to the market until it was mega. So now you have increasing levels of private equity and non-public funding, basically. And what happens then in some respects is the public market participates at a very late stage, and the public market is the public market, basically. And very often, as happened in the case, it gets to participate at maybe the pumped stage rather than the growth stage. So you miss all of that maturing process. But that's a challenge for exchanges, to make themselves relevant to small caps, to get them onto the market, to get them issuing instruments, be it debt, be it equity. And as I said, I mean, some of that is, I think they're very interesting sectoral opportunities at the moment. Alternative energy is one that I'd say in particular, and there are some other sectoral ones that we're looking at the moment that, again, are very interesting.
Okay, with that, I'd like to open it up to the floor. If anybody has any questions that they'd like to ask anyone on the panel about this bullet point, please feel free. Just raise your hand. I'll call you out, and we'll try it via open outcry. If that doesn't work, I'll come down with my microphone. Any questions at all for the panelists, or have we pretty much summed it up? Okay. Do the panelists have anything else they'd like to discuss at all on this bullet point, or should we move on? We're good to move on. Okay. We'll talk about the second bullet point, opportunities for exchange-traded fund listings on the Malta Stock Exchange. I can just tell you a bit about the United States. The exchange-traded fund space is one of the fastest-growing spaces on our exchange. These products are highly efficient, both from a tax point of view, a cost point of view in terms of commissions, executing trades. We have all types of investors trading them, from the person that buys and holds assets for long periods of time to the day trader. Some of these funds are ideally suited for passive investors, like the traditional stock funds, like the famous SPDR fund, the S&P Depository Receipt, symbol SPY. I believe that's the largely traded ETF in the United States. But also there are some that require more active trading, especially if those derivatives are priced off of, those ETFs are priced off of derivatives. One that needs to be actively managed is the volatility derivatives that I commented on a little bit this morning. The main one is, the symbol is VXX in the United States. I guess I'll start out with Brian on the exchange-traded fund space.
Yeah, I think this was an area and a kind of a particular product class that we were very early advocates of, and we actually structured the first ETF over our own index, basically, and pulled together the relevant investment banks, the paying agents, the custodians, to create that. Our index is the ISIC. The ISIC 20 ETF was a fund which has been 26% up year to date. It wasn't a huge success from a distribution point of view, and I think I'll come back to the overall ETF growth, because it was not taken to heart by local brokers and distribution, because it represented essentially a 20 basis point means of accessing the market in one stock, as opposed to a tracker fund which offered a 300 basis point opportunity to access the market in one stock. So in some respects, ETFs have been too efficient. You've seen, but ETFs are they're some of the most liquid stocks in the world. Drew has mentioned that the SPDRs, the Qs is the same, the Eurostoxx 50, the FTSE ETFs. The growth in assets under management in ETFs, it took 19 years for assets under management in ETFs to reach 1 trillion. That point was reached in 2009. It took 4 years for assets under management in ETFs to reach $2 trillion. That was reached in January of this year. So I just posed the question, 19 years to get to 1 trillion, that doubled in 4 years. How long again to get to do another doubling? And it has been leveraged up. And if you're one of the biggest providers in the world is BlackRock. They reckon that assets under management in European ETFs will double in the next 3 years. Similarly, fixed income ETFs are hugely underrepresented and are becoming more and more popular. So I think it's an area which is it's an absolute natural for exchanges. The ISIC 20 ETF was, in my mind, it's an IPO that we helped create. We didn't wait for the IPO to come to us. That fund, that stock, it trades like they're called funds, but they trade like stocks. And equally, we also have in a business that we have a very large international listings business. So we list about 7,500 investment funds of various ilks from all over the world. But we have pushing 100 ETFs on the exchange, are listed on the Irish Stock Exchange. Most of the iShares platform by BlackRock comes there. So I think the ETF space is absolutely a space, and I think it's one which, as a result of regulatory change, as a result of MiFID II, as a result of some of the pre-trade transparency requirements and post-trade transparency requirements coming in MiFID II, there are actually opportunities for exchanges and maybe some new players to provide particular services into the ETF space. I think there's a price war now happening in ETFs. So Vanguard, which is ratcheted down prices in the US on it and has now got the other participants in the market to start following suit to an extent. Vanguard are only now accessing Europe basically, and I think there's opportunity so where there is that price contraction, I think the ETF providers are going to be looking for leaner and better solutions basically, and the situation in Europe at the moment is definitely not optimal. There's also a huge opportunity for growth. I just link it back to our earlier discussion in a way, in that some of the more interesting ETFs, certainly in the US, have again been sectoral ETFs. I've long been an advocate of the idea of small cap ETFs, basically SME ETFs. There are not many of them out there. That would trade the Russell Index, for example. There are a number of them. That's an opportunity as well, even at a national level, if you had the right infrastructure supporting that, you had the right form of market making and price formation in it, that an exchange working with an ETF provider, providing an SME tool, which maybe not for the domestic market, but to market, if you wanted to market Malta, or once you have a critical mass, or market Ireland abroad, one of the best ways of doing that is by means of an ETF. I think there are lots of opportunities in the space.
This is, again, I think I concur completely with what Brian is saying. This is an area where perhaps we at the exchange, at the Malta Stock Exchange, have been slower to develop than perhaps we would have liked to, but now are looking into this space, and also, again, being driven as well by, and listening to what the industry is saying. There's a lot of interest, again, in our markets from ETFs, and not necessarily the very big cap ETFs, which probably will not be suited to our market, but certainly the medium and smaller cap ETFs are looking again to our jurisdiction. I would be very interested to hear what's happening in the other panel, because in the other panel there's a presentation on ETFs and the opportunities there being given by our colleagues in the banking sector. But the way we see ETFs as well, and to make a success of this within the market, I think it's very important that we do not simply have an ETF structure, an ETF rules that would only attract, if I may say, ready-made in ETFs or European or non-European ETFs looking for a domicile, but we should also be looking at a homegrown ETF or part homegrown ETF, because this is, we firmly believe, as I believe, that we have a very largely domestic market, and yes, we want to look internationally, but getting a very good, solid home base, if I say that, actually makes even the participants come on board more and actually sell more and increase this business. If I may take the similarity with the fund industry, with the fund listing. When we started listing funds in 1995, we had a request to list one fund, one local fund. We had no rules specific to funds, and yet we listed it. And this was a local fund. We then saw an influx of funds coming in and other local funds coming in. And I think the ETF space is similar to that. Has to be similar to that. It has to have a similar growth. I think Brian mentioned the idea of an SME ETF, which I think is an interesting concept, and one that perhaps we should look at as well. It's an interesting thought.
Well, I think that from what we've heard already, it seems quite clear that there is huge growth in this area of the market. The market for ETFs has been growing since its very inception. I think that where that can be relevant to Malta is to what extent can the Malta Stock Exchange actually tap that market and have ETFs listed here. If we go back some time and see how the funds industry developed in Malta, and I think Eileen mentioned this with respect to listing, I think that Malta has the necessary regulatory and legal infrastructure to do that. The Malta Stock Exchange has the right technology and platform to handle that trading. But there is, I think, a big difference between establishing and registering funds in Malta and actually having them listed on the stock exchange and having them traded here. I think that's where there's a quantum leap there which we need to make. And although the infrastructure is there, I'm not sure whether the market participants creating the depth required for that market exist in Malta. So I think that where we would really need to start is to see whether the industry participants, the market participants, would have an interest in Malta developing as a platform for ETFs in order to ensure that you don't just create the platform, but you need the market participants to actually give depth and liquidity to the market. And I think that that is the area where we might be at the moment lacking. Again, I think the regulatory infrastructure is there, the technology is there, the platform is there, but do we have the level of market participants or the quantity and quality of market participants necessary to ensure that we will eventually have a deep and liquid market?
Okay, I'll start out by just asking a question to the panel, and then I'll open it up to the floor. And I'm hoping that the floor will suggest maybe some type of ETF product that might be listed on the Malta Stock Exchange and that might have demand if it was set up, listed, and if the liquidity providers and the market makers and et cetera were there providing pricing. But I'll just sum up. As Brian pointed out, the exchange-traded fund space is very efficient from a low-cost point of view. It's tax efficient, especially when combined with Malta's financial system. It has some great features, as Brian pointed out. It acts like a mutual fund, but it trades like a stock. And that is a very important thing because you have the benefits of the diversification of a mutual fund without the costs, but yet you can trade it like a stock. You don't have to wait till the end of the day to get out of your positions. You can use stop-loss orders and different trading types of strategies and systems to either reduce risk or increase trading opportunities. And then he mentioned possibly a small to medium enterprise ETF. Eileen also spoke about that as well, saying that might be a product that might be exciting. We know the small to medium enterprise space is a young, dynamic, and potentially profitable space when it hits its stride. And hopefully if we can bring it to public on time and not too late, like in the case of Facebook or similar things. And then Lewis talked about the infrastructure. We're going to need market makers. We're going to need our version of a BlackRock or a Major or a S&P or a Barclays or someone here to make markets in it. I would just give the panelists one more chance to answer that, or anything. Am I missing something there? Or do you have anything to add on that before we pose it to the floor?
Could I think the point Lewis made is an excellent one, and it was one we probably should have teased out, in the sense that I think in some respects Malta, Ireland, whatever, we've missed the boat for trying to become the centre of liquidity for existing large-scale ETFs in Europe. Okay, there are a few venues for that. It's Frankfurt, Italy, Borsa Italiana, and really London. Okay. But there are significant opportunities in niche areas, and one of the areas, so I think it's not trying to do a Me Too on the very large scale products basically, but maybe talking to some of the issuers of the large scale products and having discussions with them about maybe more niche products. One entity that which grew out of actually, and I commented on the fact that we started up an Isaac 20 ETF, which has been successful, but not dramatically successful because the market hasn't bought into it. But as a direct result of that, one of the relationships that I developed and one of the service providers to bringing that product to the market spun off essentially now the dominant commodities ETF platform in Europe. It's a company called ETF Securities, When we were dealing with them, they had less than $1 billion in assets under management. They've now got more than 20 billion in assets under management, and they have about 300 products basically, and they're the dominant player in the commodity space, in the commodity ETF space. So in some respects, it's about picking your niche, and there are niches that are still available. And Malta is similar to Ireland in this sense, in that we do very good business out of, we don't necessarily have to get the trading. If we provide the servicing, if we provide the listing, if we provide, it would be nice to get the trading, that's the jam on top basically, but there's a very good and very sustainable business, if you're of a particular scale, in providing servicing to that industry.
Aline, anything there? Or?
Yeah, I think just on the last point Brian said about, not necessarily getting the trading, certainly I think that is maybe the most realistic way of going, at least putting your foot in the water, putting your toe in the water, if I may say, because as we have seen in other areas, you get over the first hurdle, and for many of these securities, for many of these instruments, it is the listing side which is probably the most problematic, rather than then going on to any other market they choose to list. So certainly, while being very happy to be able to offer all the services, I think in this world, in this world of upheaval, then the reality is that you offer what service the industry asks for. So yes, I think the listing space is the interesting space to start with.
Yeah, so what Eileen appears to be saying is that, if you build it, they will come, meaning once you start listing some products, all of a sudden everyone comes out of the woodworks and says, hey, I didn't know, you're listing these types of products, and a whole new business can be potentially spawned. Does anyone in the audience have any questions about ETF space, or maybe some products that they would like to see listed on the Malta Stock Exchange or the Irish Stock Exchange or something like that? Or should we move on to the third bullet point? Okay, everyone pretty quiet there so far. Okay. All right, we'll move on then to the third bullet point, which will be leveraging international partnerships between exchanges. And we'll start off with Eileen.
This is an interesting subject. I remember I was on a panel, on an international panel a few years ago. And the panel then was dealing with, to use an expression used this morning, all doom and gloom for small exchanges. Because the panel was talking about how are small exchanges, or relatively small exchanges, going to survive in the then environment of these mega mergers that were happening in the world of HFT. How are these small exchanges going to exist? And at that point, this was 3 years ago, 2-3 years ago, I mean, it was, think of doing something else because you're really not going to survive. 2-3 years down the line, I think there's been a complete change of direction. One, I think that is, even on a European level, there has been an acceptance that, exchanges are businesses like everything else. They have different business models, different sizes, different services, so there is actually a space for everyone. What we've seen also from participants in the market, users of our markets, is that users are becoming more seeking more specialization. There are some companies who are going for the volumes, there are others who are looking for other services, who are looking for regulation, who are looking for IT structures, who are looking for reporting structures, who are looking at the post-trading space. So we've seen, I think, a move into specialization. I think we've seen a move where a particular companies, and again we go into the space of the SMEs perhaps, and the smaller companies who literally feel overwhelmed with the big markets. So they are looking to markets like Malta, like Ireland, like very similar markets who can offer perhaps a more personalized service to them. So it's interesting how the world has turned around. Looking at what we're doing from the Malta Stock Exchange, it's the strategy of the board for the last few years has been very much focused on increasing our international footprint. You know, you do that through new businesses. You have your technology that helps you. You do it by, you know, by collaborating with different partners who can be exchanges and who can be, you know, technology providers. They can be advisors. They can be from all sorts of places. One issue that we perhaps find as a small exchange, and I would assume that a lot of small companies find this, is that because you have limited resources, whether it's funding, whether it's human resources, whether it's technology, it is very easy to miss the boat in development. So you actually have to either go out and buy the expertise or actually find you know, your peers and collaborate with other exchanges. And together you can leverage on the strengths of the different markets and the different markets without having to perhaps expend a lot of time and a lot of investment in actually being in a position to be able to compete. At the Malta Stock Exchange, we've done that. We've done that on our technology. We've partnered with a new partner on our trading technology. We're partnered in our post-trading infrastructure. With our colleagues in Ireland, we have you know, collaborated in a very concrete way in creating an innovative product. So. Okay. We last year launched a new market, the European wholesale market. Which is a new market, which is a venture between ourselves. Perhaps it hasn't developed as fast as we want to. We haven't seen perhaps participants in the market, but we're positioned ourselves, and it's a very concrete example of how two European markets actually, and using the European infrastructure, can actually create something by leveraging on the strengths of the different markets. So we're providing two different things to the market: primary services, secondary services. But it's a very concrete way of showing that you don't have to start from scratch, that you don't have to, you know, build from ground zero, but really you can go out there and find the opportunity and find an opportunity to actually, by building something, to do it very quickly and do it more economically as well. So certainly there are opportunities for collaboration. I would say that at least looking at the exchange environment, there seems to be again walking away from the big mergers, walking away from these mammoth markets, and which worked for in some cases, but really is not what I think market users want. Market users want or seem to want a more specialized, very transparent environment where they feel more comfortable, more comfortable. And I think even we're seeing a lot of developments even on the fringes of Europe. For example, the initiative by the Istanbul Stock Exchange, which through collaborations through its regional exchanges is creating a particular platform, a particular niche for that area. So it's not creating a new exchange, it's not creating a regional exchange, but is really collaborating through its regulation, through its platforms, through its technology.
Yeah, I mean, to take a maybe slightly roundabout intro to this one, I'm reminded of the very famous Newsweek cover in 1979, which heralded the death of equities, and 3 months later began a 20-year strongest bull run of the century, basically, and we've in more recent times there's been heralded the death of small exchanges. Okay. In some respects, for all of the reasons that we talked about, there is a natural alignment between SMEs and small exchanges. You know, number one, we are small exchanges, or a national exchange should have a particular affinity with the SMEs in its own country. That's one reason for continued vibrancy and relevance for small exchanges on an ongoing basis. However, in delivering on that, you really do need to think about your business model very carefully, because we've moved way, way beyond there ever being any entitlement to have a business just because you have the name exchange over your door. You really are only as good as your infrastructure. You are only as effective, or as, you need to have a very effective, very resilient, very cost-effective business model. We have a particular, in Ireland, I mean, the Irish Stock Exchange kind of, if you're to look at the history, it dates back about 200 years. For all intents and purposes, it actually dates back to 1995, because 1995 we split from the LSE. What's now the LSE was then the International Stock Exchange of Great Britain, the Republic of Ireland, blah, blah, blah. And at that stage, the commentators didn't give us much of a chance, basically, in 95. How could you compete with London? All of our companies were dual listed. All of our member firms had joint membership between LSE and the ISE. And how could you compete? We competed by being relevant. We also competed, and very quickly thereafter, the first major job that I had when I joined the exchange, and probably the reason I was hired, was to take the market from it being a market floor telephone trading model to an electronic trading model. And the first call I had to make was build or buy, and I knew we could build possibly, but it was going to be expensive, so it was buy. Then where would you buy? And I decided to partner at that stage with Deutsche Börse. Now, Deutsche Börse back then was a very different entity. It was far less the international behemoth that it is now in the exchange space. It was more Frankfurt for Papier Börse. It was a far smaller exchange. But they had good technology. They also had a very good business model. They had a derivatives model as well as a cash market. They had a great marketing team on market data, and made that call, and it's one of the best calls that I and the exchange and the Irish market is very happy that we've done that. It's also, again, I think Malta has came to a very similar conclusion recently, and has again is partnered with Deutsche Börse, but it's a technology partnership. There's no, I'm not familiar with the details of the MSE deal.
Technology partnership.
But all it is it's a technology partnership. So we get scale, we get international access, and we get an ability to. I'll give you one statistic. Before we launched Xetra, there were 10 member firms of the Irish Stock Exchange, and they were all domestic broker-dealers. We've now got 45, and 38 of the 45 are international investment banks, prop houses, securities traders of all types. So we've gone from 100% domestic to 85% international, and that delivers to liquidity. And we still, after 18 years, we still are the dominant point of liquidity for the trading of Irish equities. Partly because we're the cheapest place to do it, partly because we're very easily accessed. So that international partnering is absolutely key. And it's not just about the trading infrastructure, and we do the same for our central securities depository. We don't have we're not a group in the sense that we have the CSD within house as is the case in the MSE, but we use Crest or we use Euroclear. And again, for a clearinghouse, we use the dominant clearinghouse is Eurex Clearing AG. Okay, so it really is. One thing we don't have is we don't have scale. So we partner to get scale. There are other areas as well where Ireland went through a very rough time over the last 5 years, basically, with the bursting of a property and then immediately banking crisis coming off the back of that. And there was a period at that point in time Ireland went from being, and Irish equities went from being, a must-have part of the portfolio to being, it went from being buy to being hold, or in some cases sell, almost at a national level. So we partnered at that stage. I did a deal with Thomson Reuters, and we developed an investor relations portal, which we provided essentially at below cost to all of the issuers in the Irish market, which is a brilliant analytics tool aimed at the CEO, investor relations officer in a big enough company, or the CEO, CFO, and it gave them an ability to target investors, and it gave them ability to leverage up their own investor relations efforts on an international basis, using a tool that we gave them, we branded, and they were getting it at way less than they would have been able to get it if they had gone directly to Thomson Reuters, or, and most of them had never even heard of the tool. So it was kind of a win-win situation. Thomson Reuters were delighted because they got a degree of penetration into the Irish market that they hadn't achieved in kind of the 5 years previously. So it was an absolutely win-win situation. But again, it is that international linkage. And I think one of the things that, and I apart from meeting Eileen in Valletta, meeting Eileen in Dublin, we do meet a lot when, on the international circuit. And one of the exchanges have to be international. And I think one of the things that an exchange can bring to its domestic constituency is that international view and that international linkage. And if an exchange needs to be anything these days, it is a portal, basically, for the domestic market out and for the international market in. And relevant exchanges are going to be the exchanges that provide services in that portal space.
Well, I think that there's very little I can add to that. I'm a lawyer. But if I may, I think that small stock exchanges will remain viable and sustainable, provided they remain relevant, particularly in their domestic market. And then providing the interoperability or accessibility to the international participants. But I really think that as long as I'm not quite sure that the market doesn't want smaller exchanges or prefers smaller exchanges to bigger ones, Eileen. But what I do think is that there is space for both. I think that the traditional markets, London, New York, Frankfurt, they will always retain their place in the bigger picture of things. But there is also I think space for the smaller markets. My thinking is, provided they remain relevant, first and foremost in the relevant domestic market.
I didn't mean to say that the big markets don't have a space. They certainly have a space, but they have a relevance for particular clients, for particular users who have a particular business model. I entirely agree that all types of exchanges have a space and different trading venues have a space. And also to pick up on your last comment, Lewis, certainly for small jurisdictions, and I suspect that Ireland is very much the same, the market has to remain relevant domestically. I mean, you can increase your business internationally, you can get all your international, and that's necessary, certainly for a market like Malta, which has a finite growth domestically. But it is so important that profile, that domestic profile, that penetration into the domestic market actually remains.
Yes, I've seen both cases in the United States. In the commodity space where I deal in, we've seen a lot of merger and consolidation. I mean, years ago, we probably had, 5 to 8 different commodity exchanges in the United States. Now we pretty much have 2 giant ones. But in the stock exchange space, it's been a bit different. We still have the main board, the New York Stock Exchange, but we have all of these other electronically connected networks that are kicking in and dark pools that are gradually pulling volume from the exchange. So we've actually seen both types of things. But one thing that's been mentioned a lot here is both Eileen and Brian had mentioned that, look, mergers are not really what's happening anymore. That's so 5 years ago or 10 years ago, which is a long way back in the exchange space. So now new things are being done by partnerships. So mergers have been replaced by partnerships. And I would ask both, I'll start with Eileen and then Brian. So generically, what would be your ideal partnership candidate? In the old days, what would be your ideal merger target? Today, what would be, generically, what characteristics would you find in your ideal partner?
Well, certainly I think it would be a partner who has a similar business model, similar regulatory operating structure, but who has expertise, resources, penetration in an area of the market where you would want, where your exchange doesn't have, you want to develop, and therefore by partnering, you are actually getting a quick win, perhaps, solution to the way you want to develop. Obviously, it has to be a two-way partnership. So I would think that your partner would be getting something again from you, whether it's just the creation, penetration into a new market, whether it is a technology link that you have and they don't have. So whether it's riding on some technology, other technology service you may have. I think that would be an ideal partner. Geography, depending on what you want to developing, and I don't think is first and foremost important, but because you may, an ideal partner may be some exchange at the other end of the world in a way, where you can penetrate and you have the geographical penetration there. So yes, I would say somebody who's similar, but can offer you something that you are wanting to develop, a new product or a new service that you want to develop, and you can buy into that partnership.
Would help if she were tall, dark, witty. Maybe Chinese, actually, if sort of speaking geography these days, but sorry, from a business point of view. It entirely depends on the business proposition, I would say, because the right partner for us for a trading platform happened to be Deutsche Börse and the Xetra platform. The right platform, when we have a significant part of our business relates to a primary markets business for the listing and servicing of international investment funds and debt securities. So we've just about 29,000 of those instruments from 44 countries, and a lot of different product types. We were very, very keen, though. There was a certain, we were very keen to look at a geographic diversification of that, because all of that was in Dublin and into Ireland. And looking to see whether we could maybe provide a better or a different model for that from a value chain point of view, maybe provide some additional types of services that, again, was difficult to provide maybe in our domestic market. And we had, through our international linkages and interactions, there was a fairly short list in terms of entities that we could deal with, because we wanted Eurozone, we wanted a very strong regulatory environment, we wanted, ideally, English speaking, common law jurisdiction helped as well, or similar to something that we were familiar with, and partners that we could work with. Now, which is quite a long wish list. And absolutely top of that from the discussions was the discussions with the MSE, basically, and the genesis and the launch of the European wholesale securities market last year was actually a wonderful partnership. It worked really, really well. Now, we chose to launch a wholesale securities market in the depths of a Eurozone credit crisis, basically. So timing, but this is a long run thing as far as we're concerned. The structure is there. It makes sense. It is available to wholesale issuers of debt. There are some interesting prospects in the insurance space, in the shipping space. in the fund-backed bond space, and a number of other possibilities. And again, we've created a market. It is a regulated market under MiFID, under the Prospectus Directive. So it's a full metal jacket market in terms of issuers looking for a regulatory imprimatur. It is a very lean market from a cost structuring point of view. It's a very low risk market because of it leverages completely off the reputations of the two very well established exchanges behind it, and is completely overseen and authorized by an excellent regulator in the MFSA. So, I think that those are, in some respects, two examples. As to where the next one would be, I've one in mind, but I better not say it because it's subject to a non-disclosure agreement at the moment. But that would be, I think that there was a kind of 1980s Gordon Gekko fixation with M&A in the exchange space for a long time. That the only way to get into business together was to actually buy the other entity. I think that's a very limited way of thinking, basically. There are different ways of doing, some of the best ventures are joint ventures, basically. And if you pick a joint venture with the right partner, where there's a win-win upside, there is a joint equity participation, there's a joint sharing of the direction, then, that provides a very good outcome. And there isn't, there kind of isn't an NYSE in the same, or there soon won't be an NYSE in the same way that there always has been. It's been taken out by ICE, and the first thing they're going to do is flog the Euronext cash equities business. So we're back, and that is again more of an opportunity in that space, I think.
Okay, I think what I'll do is open up to the floor for any questions. Does anyone have any questions for the panelists? Yes, sir. Do you need a microphone, or? Oh, okay. Thank you. Thank you.
How does AIFMD affect your view on how you can grow your business, particularly certain different other business lines, you're both in Europe, and you talk about other parts of the world, long way away. If you can just expand a bit more on that.
I'm not an expert in AIFMD, that would have to be one of my colleagues, but I know enough about it to be able to comment. In some respects, I think the European regulatory tsunami, and AIFMD is part of that. Okay, MiFID II, Prospectus Directive, CRD4, Solvency II, you name it. They're all double-edged swords to an extent. They bring both challenges and opportunities. Okay, I would give one example. We launched a service last year, which is something called prime collateral. It's to do with the prime collateralized securities kite mark, basically, and it's as it says in the tin, it's a kite mark to essentially recognize a particular quality, AAA grade of collateral underlying particular securities. We provide a review and third-party opinion on that, basically, and it's backed by the European Capital Markets Association. We spent a lot of time talking to the ECB about it. But that, in some respects, was driven by particular issues and also some of what's coming down the line in terms of greater controls over collateral, basically, and looking for a degree of transparency and a quality mark in that space. Now, it's very early days; it's months old, but we've already put, I think it's 8 securities through that from a number of large European banks, basically. AIFMD creates significant challenges, basically. It's something we tend to deal with those at a very, very early stage, though. So we've been tracking AIFMD for years. So in some respects, we've dealt with the worst of the downside risk almost by the time it arrives. Now, there's always an AIFMD is a particularly good example, whereby what you think you're preparing for, i.e., what came out of ESMA, turns out not to be what you end up having to deal with by the time it comes out of Parliament, or vice versa. But it, that was still on the margin as far as we were.
But I suppose what I'm thinking is that people will go out of Europe or into Europe. You have to decide, or you can have a feeder structure for your fund to put yourself in that position. And Ireland's a beneficiary of this in terms of fund listings at the moment. But it affects real estate funds and private equity in a different way, and maybe that goes to Channel Islands, for example. And also it affects business models. HSBC seems to be pulling back here from certain of its activities. People are talking about whether they can get decent service providers for depositories and what have you. So I'm just wondering whether an exchange can fulfill a different role that part of the market is pulling back from in that manner, and whether there's an angle there because of the regulatory change.
And yes, Darren, isn't it? Yeah. I mean, there is, and let me comment on. I think I mentioned ETFs are coming within a new transparency regime under MiFID II. Okay, so there is therefore going to be a heightened level of reporting required for ETFs on a European basis. Now, is there a lean trade reporting single repository, a bit like kind of a market boat approach, but maybe something that is specifically tailored towards an ETF regime, and then feeds into the broader channels. That's an interesting. That's an area we're actually looking at. It's an area we'd advocated about 4 or 5 years ago to providers, but nobody wanted to listen to it at that stage because it was upsetting the business model that existed. Now there's actually, or shortly, there will be there's a regulatory requirement for that to happen. So you're in a whole different, kind of conversation. All of a sudden, people have a problem to deal with. Yeah, I think there are, FMD is one of the ones we were very concerned about 2 years ago. We're less concerned about it now. And some of the changed direction, some of the changed nature of flows in some of those markets is, we've seen one of our main markets was hedge funds. I mean, we're more hedge funds list on the Irish Stock Exchange than any other exchange worldwide. That's a business which is not as good a business as it once was. Clearly, we're seeing we still up until recent months we'd seen net outflows. There were more consolidations and delistings than there were new flows basically in that space. So you have to stay nimble. You really, as an exchange, you're kind of only as good as your last gig, and that is that's as true as it ever was. Small exchanges have an advantage, I would contend, on that, and sometimes we can respond to changes a little bit quicker. We're not the large tanker turning, basically.
Yeah, I think I concur with Brian on this. I think the whole sheaf of regulation coming out now and the technical implementation that is coming out from ESMA is a mouthful, is something that you have to read between the lines. And first reading is quite frightening, and all the requirements that are even required from even under EMIR, for example, the new ESMA requirements for CCPs, and you start seeing these figures and you say, we don't have the critical mass to be able to go into this business. But I think a deeper reading of this, a more detailed reading, does provide opportunities which we didn't think of a few years ago. I mentioned things like trade repositories, which might be, we already have an infrastructure to a certain extent, so might be an area where we could, totally off the bat of what we do now. But not easy to think of, or not easy to get great advantages of these new directives without sometimes that critical mass. And it's always the argument of which comes first. Do you have the structure, do you have an infrastructure, the investment in place, and the critical mass will come, or else do you wait for the critical mass? So that's a fine decision and fine balance that you have to make.
Okay, we have time for one last quick question. Anyone with one last question before we break for today? Okay, then I'll ask it, and it's in furtherance of this morning's jokes and banter, and it's to Eileen. Eileen, has there been a lot of demand to list a frozen Maltese chicken ETF on the Malta Stock Exchange?
I was going to ask, what's wrong with Maltese chicken? I didn't know what was wrong with it. Well, we could always do a fresh chicken ETF. We're not even going for freezing, but it's very curious if somebody.
So no immediate plans in the near future.
No immediate.
Thank goodness. So on that happy note, I think we'll conclude today's session. Thank you so much for joining us. Thank you.